Hello, I'm Paul Hefner, the CEO of Finance Pals, and today I'm going to be talking about uh, CPA services and sort of what they are, and we'll go from there. I'm share my screen here, created a little presentation. Here's my background. I won't take long on the slide. You can pause it if you want to read it. But basically, I own a CPA, bookkeeping, and CFO firm for about 5 years. So in general, there's CPA firms and there's sort of, big four firms, and they mainly focus on tax and audit. Those are the two departments they have. And then there's, smaller CPA firms, and they do all sorts of other things like bookkeeping, CFO, advisory. And so we'll cover all that. Tax, in my mind, is basically how much you owe the IRS. And it's doing the forms and filing them so that the IRS knows how much you owe, and then paying that amount. It's the sort of not fun part of making money, I guess. Then the next part is audit, and we'll cover tax more on the next slide. Audit is not like if you get audited by the IRS, that's something different. That's, if the IRS gets all of your forms in, or let's say somebody sends you a W-2 or a 1099, and then they look at your income that you filed on your personal return and they don't see it, then they'll say, hey, where is this money? Or, hey, we didn't get returns for the last year, where's our money? Or all those things. Those are the audits, and that's something different. The CPA audit is more around, do your financials make sense? Do you have, some amount of debt that's concerning, that, maybe your business is, likely to go out of business and you're not making money? Are there other concerns that would cause, I don't know, the virus would cause an investor, like a lot of times the audits will help investors feel comfortable that the company's doing a good job and there's nothing they should be doing differently. They have good processes and how they're documenting everything. Are they classifying revenue the correct way, or are they, saying, hey, our revenue is, $5 million, but then, when the go through the audit, you look at it and say, oh, it's really only $1 million. It's all those sort of I don't know how to say it, warning flags, and they try to work with the company to fix those things so that they can sort of sign off on it and say there's no concerns. And ultimately, it's to try to improve the financials and all of the reporting that they're doing. And then the last part of CPA firms, sort of bookkeeping, CFO, and advisory. And what I would say is, if you have, traditional CPA, that's just doing your tax, and then you're sort of also paying them to do your bookkeeping, a lot of times, I would look at specifically using somebody who's a bookkeeping firm, or who can give you sort of bookkeeping pricing. I know, especially if it's a one-person firm, or maybe even a few people firm, they don't have the right scale and the right processes to specialize in bookkeeping and to charge bookkeeping rates. So I have another whole video I'll put in the notes around what are bookkeeping services and all that. But all the payroll, accounts payable, accounts receivable, invoicing, and paying your bills, all those things. A lot of times, if you're just paying a CPA firm to do that, you can find a cheaper bookkeeping firm that specializes in that. And it's something that we specialize in. Same with CFO services. If you have sort of a traditional CPA doing CFO services, they've never really been a CFO in the past, and they don't really have that experience. They can help you do some cash flow forecasting, help you do some things, and it'll work. But eventually, if you're a growing business and want to be successful, you need to find sort of the right people. And that's another thing that I'll post a note, because we also offer CFO services. And then the advisory consulting is, especially around CPA firms, is usually more around reducing your taxes and things like that. So we'll cover some of that on the next slide. So, when I think of a CPA for most people, their firm's not big enough to need an audit, because audits are pretty expensive. Their main purpose for needing a CPA is around taxes. So these are some of the taxes that you might be interested in. So you might have sales taxes if you have products, like if you're selling shirts, or even photographs or whatever it is, you need to collect sales tax from your customers, and you need to pay the state sales tax that they're due. Use taxes is sort of the opposite of that. If you buy things, you pay taxes, sales tax, and then you're able to deduct some of that. Or if you, in the a few years ago, there were some issues where certain companies like Amazon or things like that weren't charging sales tax, and then there was this sort of use tax adjustment that you need to be doing, but that's slowly going away. And then the most common one is the income taxes. So all the money that you make as a company or as an individual, you have to pay taxes on that. And so CPAs will help you figure out all those taxes. They'll also file those returns, so the 1040s, 1120s, 1040s the individual. A lot of times you hear about the Schedule C and other things like that, where you sort of can list off all those other money that you made. In 1120 would be your, if you're a corporation, those returns, and then you have the federal and the state filings. And then the more interesting part is around the tax planning piece. So, after looking at your return, after knowing your business, coming up with ways to lower your taxes, or even just a plan to say, hey, you're going to owe this much money, you need to budget this so that you're able to pay it, and you don't get this huge surprise in April where you owe this huge bill and you don't have the money. That can be done through usually through quarterly meetings to sort of say, here's where you're heading, and then a good CPA is something that we do, as we try to be proactive and say, okay, how can we what can we do to lower those taxes? What can we do in terms of retirement planning and retirement contributions? What can we do in terms of investing in the company and paying expenses to have your basically your income go down. And this is really something that your CPA should be giving you ideas, based on your business and where you are to lower your taxes. They shouldn't just be checking in, right now in January or February and saying, hey, here's my checklist, send me these things, and then, sending your form back and say, here's how much you owe, and filing it. There should be a good CPA is somebody who's going to check in more often than that. And especially if you have questions like, hey, we're changing our ownership structure. Hey, we want to invest in this company. We want to have our employees own a piece of the business. All sorts of other things like that. You should be asking your CPA those types of questions to make sure you're not doing anything that's going to have unintended tax consequences once they're filing your return the next year. So thanks for watching. Here's a picture of my family. I've got 3 kids, live in Denver. Would love to talk with you if you have any questions or want to learn about our services and how we might be able to help you. So here's my contact info, and then I'll include some links in the notes. So thanks for watching, and have a great day.